Good evening, ladies and gentlemen, and welcome to this week's liquidity fader update. I hope you've all had a very good week in the markets. We certainly have. We eventually got a trade set up for us, which is quite nice after the past few weeks of, sort of relatively low volatility and not much there in the way of opportunities. But it just goes to show that patience really does pay off. And when you get the right opportunity there, it really does go and pay you. So we'll start off by taking a look at the opportunity we took last week, and then we'll move on to look at what we're looking at for the week ahead. So last week it was the Aussie dollar that set up, and we've actually identified this level in the past few videos. We've been looking at this high over here of the 94.61 level, and we said that ultimately we're looking for a break of this high or a liquidity fade at this high here. However, the week before last, we started to get a little bit dubious of this level here because the market was just sort of consolidating at that level. And as you know, one of the main things that we like to see when we're looking for a liquidity fade is momentum there. Looking at the price action of the break, what we actually like about this, we don't get a primary entry here. We get a very, very strong bullish candle through this level. But what really makes this trade for us is the fact that the day after, immediately after this huge breakthrough over here, if this was a true breakout, you'd expect to see massive momentum towards the upside here. We don't get that, and instead we get a huge bear candle, okay, close back below the high price resistance over here, which shows us that actually the rest of the market aren't with this trade, because this gives them enough opportunity here and enough encouragement with such a strong candle here through that level. That should be enough encouragement for the rest of the market to jump in on this trade and push it all the way up here. The fact is, the very next day we got a huge reversal candle at that level. Okay, the level is always important, so it isn't just anywhere on the charts. It's at a level where you'd expect there to be momentum. We get the reversal at that level, which gives us our opportunity to get in. We have our stop above the high there. Our first danger zone is these highs over here, if you can see it, then the lows to the left there. So that represents our first danger zone, the first place we're looking to take profit, which gives us just over a 1-to-1 risk reward, which is very nice. And then we look for our second danger zone down there at these lows over there. So ultimately, first danger zone at the 93.79, second danger zone at 93.27, and as you can see, literally the day of entry, we smash through both of those areas, and we get our profit really quite easily. So that wraps it up for the Aussie dollar chart. I hope a number of you managed to get in on that trade as well. Now we'll look forward to see what's setting up for the week ahead. The first one we're going to look at is the pound Aussie. Now this is a bit of a strange one because we do have a slight poke through here at this level here, and the market is kind of closing on the line. So we aren't encouraged to take this as of yet. And even if it does close further below, we're a little bit dubious of this trade because we're actually expecting a lot more pound strength in the months and weeks ahead. And this is obviously showing us that there's going to be some pound weakness. So we're probably not going to jump in with a full trade on this one. We'll probably get in there with a half a position size, and we'll look to take our first profits off around this danger zone over here. So you can see these highs coincide with these lows over here. If we can get below that, then the next obvious point to look for a profit target is down there at the 1.8031. However, as I said, the problem that we have with this trade is the fact that in the long term, we're expecting the pound to get stronger. And as we saw from the Aussie chart just there, actually the Australian dollar is getting weaker. And obviously if this starts to sell off here, this would indicate some Aussie strength. So it's a little bit of a weird one for us. Not entirely sure what to do with this at the moment. We'll see the price action, what sets up on Sunday and Monday, and make a decision from there. But at the moment, even though we're breaking through these highs, we're not convinced of this trade at this second in time. The other trade that we're looking at is the Australia-New Zealand. Now this one hasn't set up yet, but it potentially is coming to a very, very big level. And that's this level over here at the 10641. The market hasn't got there yet. However, it has approached it with quite some momentum. We've got a little bit of consolidation there. And then the last Wednesday, Thursday, Friday obviously was a bank holiday or a holiday in the US, so we won't count that too much there. But Wednesday and Thursday, we got huge momentum down towards this level. If we can get the liquidity fade from that level, then we'll certainly be looking to take that to the long side. But at the moment, that hasn't set up, so we'll just have to wait and see. Regarding danger zones, obviously, this is going to be the first one that we look at there. If we manage to get above this level, so that's that low right around there in between in May and June, and then all the way back in December, we've got the same low, same place over there. So that's going to be our first danger zone. If we can then get above that, we'll then be looking for the 10829 level as the second danger zone to be able to take our profits. So that's what we're looking at for the week ahead. I hope you've all had a good week, a good World Cup, and you're enjoying the summer at the moment. Until next week and next video, I look forward to speaking to you then, and good trading. Take care now.